Good morning and welcome to this weekly market update for AGM Markets. Today is the 25th of May 2012. Doing this recording slightly later in the week because of a few technical difficulties that we've had on the platform. So what I'm going to be doing is just kind of going through, not really a weekly outlook because it's kind of the end of the week, but some sort of review and what we'll be expecting kind of the rest of the day really, and we'll look at next week as well. We'll not be making any trade calls or recommendations on this webinar. You trade at your own risk. Please read the disclaimer on the website at www.agmmarkets.com. For any new followers, we have three moving averages on these charts. The red one is the 55 simple, purple is 100 simple, and the gold is the 200 simple moving average. Okay, then let's have a look at euro dollar. So what have we had this week? Well, going on last week's candle, slightly bullish candle. It did have a bit of lower wick on it, but we're still, I mean, the last sort of 1, 2, 3 previous weeks have all been quite heavy weeks in terms of euro dollar. We've now broken the recent low to the left of your chart, so I'll just highlight there for you. There's a key low that is, and that the point on the chart, that level is one spot 26.25. So that's basically the 2012 low. We've now broken that. So in terms of the rest of the week, it's all about where the weekly candle closes. If it's above that level, then we are still kind of in a bullish move. Still, you can't really say that we're really hanging off a cliff unless we have this weekly close below this level, but I'll keep that on your charts. Also, that was a recent a previous support zone. If you look to your left of your chart, back in 2010 we got bids coming off of that level, and we had a nice pop above that level. So key area, this one sort of 26.30 level, and also another level to look at on in terms of this weekly chart, this weekly fib setup that we've had on for the last sort of few weeks. The level that the market is looking at is the 78.6 Fibonacci retracement level. We've literally tested that to the pip. That also kind of coincides with that previous support as well. And that is the key level that I'm focusing on today and kind of for the rest of the week. Yes, if we don't close above that previous support, but if we close above this 78.6 with some sort of decent reversal candle, then next week could be a nice bullish week. And also you have to remember it's Friday today, and you normally get bottoms in the markets on Mondays and Fridays. Fridays basically meaning, because if you've had a big sell-off throughout the week, or especially the last few weeks, then you tend to get a kind of a lot of people liquidating their positions, and you get some sort of short squeeze going into the rest of the day. And we've already kind of had that this morning. If you flip to the sort of 15-minute chart, you can see that we've clearly had a nice bounce off the 78.6 level, and we're now above the 200 SMA as well on that 15-minute chart. So we're already getting some sort of short squeeze. And also to bear in mind, especially in terms of the euro, is that we've had most of the bad data out. I mean, pretty much all the bad news has been priced into the market, a lot of people are saying. So if there's no more data to come out, then the euro is just going to go up. The euro's only really been going down as soon as some sort of news is on the wires, or some sort of bad economic data that we have had this week. We had quite a few bad PMI numbers I can remember in the week. We also had bad UK GDP as well, but obviously affects more cable. So yeah, as long as there's no more news coming out, and I think today we'll have a quick check on the forex calendar a little bit later. But I don't think there's too much news out today, so expect some sort of short squeeze in terms of euro dollar. Okay, let's have a look at the cable chart. This is the daily chart on cable, and what we've been talking about for the last couple of weeks was this recent fib move from the 152.11 low to the 162.92 high. And last week we were focusing on this 50% Fibonacci retracement level, and I think actually this week, or it may have been the end of last week, we got this nice hammer candle off that 50% Fibonacci retracement at the 157.62 level. So we thought that would be a nice sort of reversal, but as we mentioned, there's quite a few moving averages just above that level we have the 200-day moving average and the 100-day moving average. And when they're clustered together, they do tend to act as good sort of resistance zones, and that's what we had this week. We had that 100-day moving average capping cable and pushing it back below the 50% level. But now what you can see is we're now testing this 61.8 level. We had it literally bounce to the pip. If you zoom into the kind of the 1 hour chart, you can see there to your left that we had that 1 hour candle literally touch that 61.8 level, which stands at 156.37 to the pip. We had a nice sort of reversal and now it's a nice little bounce back up, but it's not a hugely convincing bounce back up at the minute. It is struggling. We thought we'd get some sort of reversal candle yesterday, and some sort of confirmation up to the upside that we were going to get a lot of buyers coming at this level, but we aren't having too many at the minute. But the setup is still in play, and a lot of people will be buying off this 61.8 level, and they're putting their stops maybe 50 pips below or even behind the 78.6 level as well. And that setup is still in play, and they're very similar to Euro really. Cable's been selling off for the last sort of the last 3 weeks. Candle's been a very, very big seller. From that 162 we've literally come down to 156 in a matter of 3 weeks. That's about 500 pips sell off. So we are due, I mean we were due some sort of retracement on cable, we spoke about before, because we've had such a, especially on that weekly chart or even the monthly, we've had quite a big move to the upside, and we were expecting some sort of retracement, and we've now got that retracement, and it's been very, very quick as well. So I would expect some sort of buyers now to come in, and like with the euro, I wouldn't be surprised if we've got some sort of short squeeze for the rest of the day on cable. Okay, let's have a look at dollar yen chart. The only real interest to have on dollar yen is this recent fib move from the low of the 76.02 to the high of 84.11. But it hasn't been too technical in terms of the bouncing off of any of the levels. The only level, well, the one indicator we're looking at was this 100-day moving average, which did act as previous support and is now acting as previous resistance. And also you've got this trend line resistance as well on dollar yen on this daily chart, which is holding very, very well. That's probably the most technical sort of level in play, is that trend line resistance, which is capping dollar yen at the minute. But it's kind of a kind of bull bear zone between the 61.8 and the trend line resistance. That's what I'll be focused on for the rest of the day. But it is looking quite heavy, and until that trend line resistance breaks, then you have to really be a bear on dollar yen, in my opinion. Okay, let's move to USDCHF. In terms of the daily chart, I mean the moving averages are miles away really, although we do have the 55-day just about to cross up on the 100 days, so a lot of people think that is a good sort of buying signal. It's worked especially well for the last sort of 3 times really, with that little cross down there and that cross up there. But I'm not a massive fan of, in terms of the crosses on the using the simple moving averages. I prefer a shorter term cross. But in terms of resistance zones, we are literally testing the kind of resistance zone on the daily chart, which stands at around the sort of 95-90 level, let's say there. Well, if you move it down to the top of the candlestick bodies, then it's pretty much 95-85. If you look to your left of your chart, you can see that previous high there. I'll just highlight that for you. You can see those spike highs there held, and we came back down, and now we're doing a very, very similar thing. And today's daily candle is looking very heavy indeed. So if we get some sort of reversal today in that daily candle, there, I would not be surprised to see next week's sell-off in dollar Swiss, and that would coincide with euro dollar going up, because they've been doing a very, very similar thing recently. Not similar, but basically completely opposite. So when euro dollar's been going up, dollar Swiss has been going down. We've spoken about for the last sort of few weeks, so you should be all aware of that. In terms of the slightly shorter term charts, if we look at the 4 hour, you can see we are in a very nice trend line, upwards trend line here, with a nice trend line support which has been holding very nicely since the 30th of April. And that also coincides with this 55 bar moving average on the 4 hour chart. So if we get any further sell off in this pair, They would not be surprised to see this kind of bounce off this trend line and this kind of confluence support zone of the 55 bar moving average. But no, it's very, very nice chart dollar Swiss. You just have to remember, all I'm really focused on is this key resistance level and this trend line support for that pair. Okay, that's done for the Forex. Let's have a look at gold and silver. In terms of gold and silver, it's all about this key support around here, which we spoke about. You can see the amount of times that we've got bought at this level, this kind of 1540 level on gold. You can see you see one spike there, huge spike there, another one there, and at the minute we are literally, well, twice this week we've already had candles pierce below this level and bounce back up and post a daily candlestick close above this this key 1540 level. So in terms of gold, I'm still bullish towards the upside. I mean, the amount of people that buy gold on the dips, although yes, it has been ranging for the past sort of 5-6 months. Always going to get buyers at big dips like this. I mean, especially the previous 2 times we've had big buyers at this 1540 level. In terms of shorter term moves, I'll just get rid of the clips. Bear with me 2 seconds. In terms of shorter term fib moves, what we had this week was this fib there on the 1 hour chart, which got bought at the 88.6 Fibonacci retracement level at the 1533, and that got bought up very nicely, and we broke above the 50% level, which was acting as previous resistance around here. And you can see that we've got capped at the 100 hour moving average at the top here, and we've started to come back down, and now it's starting to get a little bit choppy. So nothing really of huge interest on gold. I mean, the moving average has been working very nicely on the 1 hour chart. You can see up there with the bounce for the 100 hour moving average. And you can see you can see another bounce there of the 200 hour moving average, and we're now getting some support at the 55 hour moving average. So that's why we use the moving averages, because they do act as very, very good support and resistances. But in terms of gold, no massive short-term perspective for the rest of the day. All I really focus on is this 1540 level for gold. Okay, let's have a look at silver. Silver's been slightly different actually. Normally gold and silver do a very, very similar thing, but the charts are starting to look quite different now, which is quite surprising really for silver. Key level that you really should be focusing out for is this 27 handle. Very, very similar to gold actually, in terms of where we've had 3 big spikes, and they've come below this level and pierced, but 3 times that we've had buyers come back into the market and push gold above this 27 handle, and that's what we've had this week. Quite similar to gold in that sort of context. But in terms of recent fib moves and what else has happened this week, we had a lovely bounce off of the 78.6 level in terms of that recent fib, from the 26.76 low to the 28.91 high. That fib move was very, very nice, very, very technical indeed. We had a nice 1 hour reversal candle there, and we're now popping to the upside on silver, but we are starting to get a little bit capped. You can see here there's a nice little trend line resistance, so I'm just going to get rid of this this orange circle because it's getting in the way. You can see a nice little, quite a little trend line resistance there, which is holding on gold. So if you're looking to trade silver today, then a lot of sellers have already come into the market at this trend line resistance. So if we're going to get any more momentum to the upside, then we need to get a nice solid break off of this this clear trend line resistance. Okay, that's all for today. I won't go through the Forex calendar because there's only pretty much a day left of trading, and I know that there's not a lot of news out today, so we'll keep it at that. Hope you have a great end to your week of trading, and I'll catch you hopefully early next week. Take care.